Second thing is stop making excuses. We here to build our finances. You can't make excuses. Honestly, you can't make excuses in nothing in life. Because think about it. Everybody got an asshole. Everybody got an excuse. Stick all your excuses up your asshole. And if you a dude and you fucking yourself too hard, you better stop. Because listen, man. Okay, you just read this. Always be your best coach. Because if you're not your best coach, who gonna be your best coach when you wake up in the morning? Instead of meeting your best coach when you wake up in the morning, which is yourself in the mirror, you gonna meet a negative ass person that don't want to wake up. That if they can't consistently beat what they're estimating themselves to make and consistently perform for the shareholders and like keep their debt down and keep good assets, if they can't manage their money, don't let them manage. Don't give them your money. You feel me? Because they're gonna lose it. That's right. So look, first thing first, what we see, bruh. First thing first, what we see is this 200 EMA, right? Boom, EMA 200. You see how what it does every time it hit this 200 EMA, it goes back up, right? So boom, that's already a trend. You see a RSI, right? What happens when it gets to the bottom of the RSI? It goes up. It goes up. What is it doing on this pullback right now? It's at the bottom, and it doesn't get past that 200 EMA. If it do get past that 200 EMA, guess what it do? Recover. Why? Because it's a good company. That's another good thing. You want to be in a good company that's consistently beating earnings. Gotta read why they fail earnings. Why is they failing earnings? Is because they CEO quitting. If they CEO quitting and they getting a worse CEO, why would I invest in something with a worse leadership? Don't invest in nothing with a worse leadership. Okay, annually that revenue been growing year by year. That's perfect. Is they free cash flow growing? We gonna see that. Is they profit? Well, they net margin is growing as well. 15% net margin. Okay. Let's check out their balance sheet. What's good, man? Hey, before I even start, I want to start it off with this. Hey, first read this. But okay, first off, you might not like to read because a lot of people don't like to read. Want to like to read text messages on our phone. Okay, you just read this. Always be your best coach. Because if you're not your best coach, who gonna be your best coach when you wake up in the morning? Instead of meeting your best coach when you wake up in the morning, which is yourself in the mirror, you gonna meet a negative ass person that don't want to wake up, that don't know their purpose, that's focused on distractions, that waste your fucking money. You don't want to be that. So just do that part. Second thing is stop making excuses. We here to build our finances. You can't make excuses. Honestly, you can't make excuses in nothing in life. Because think about it. Everybody got an asshole. Everybody got an excuse. Stick all your excuses up your asshole. And if you a dude and you fucking yourself too hard, you better stop. Because listen, man, the shit don't stop when you get 40. Shit don't stop when you 50 or 60. You just keep doing the same bullshit you was doing when you was fucking 20. So you gotta lock in and stop fucking yourself so hard. See, me, I still fuck myself. Maybe once or twice, a couple times a day, I'll be honest. Some dudes, man, they'll walk up to me and they'll fuck themselves 10 times in my fucking ear. I'm like, bro, it's always an excuse to have a fucking excuse. Nigga, your car died this morning. Nigga, my tire was flat this morning. Nigga, you couldn't be to work on time because you ain't have no ride. Well, nigga, my ride, I got in the wreck today, nigga. I still made it on time. How that fucking work? Okay, but now, since you won't make excuses no more, now we're gonna go into the fucking charts. Let's go. Action. Hey, man, check this out. Click. Hey, man, check this out. What we're gonna go over today, we're gonna go over 4 things. Today, we're gonna go over the interest calculator and how to be a millionaire easy as hell with just $100 a month. It's compounding. When you compound $100 every month and you getting a good return, boom, it's gonna do that for you. It's gonna turn into $1 million easily. Check this out. Also, what I'm gonna do for y'all, I'm gonna show y'all the historical trend of Dow and like the sector performance of the S&P 500. And the reason why I'm doing these things, what I'm gonna also show you is I'm gonna show you how to implement and how to buy on them fucking dips, you know. The reason why I'm going over this is because like a lot of new people or a lot of beginners, they don't understand how to buy the dip, or they may not understand like what is a dip. So with this video, I'm gonna go over some good dips. And honestly, I could go over some good dips I'm in right now, like LW. Look, they gapped up too. I went on and got out, man. Take profit, see profit. That's not a, like, I ain't gonna lie, I've been studying Warren Buffett more too. Hey, that take profit, see profit. Hey, I'm putting that out the window. Cause see, the thing is, let's go into these charts. Okay, first thing first, when you're looking at an asset class, you want to see historical growth. The Dow Jones the Dow Jones fucking was birthed in the late 1700s, and it's been growing since, right? But check this out. This is how much it's been growing over time in the let's see, 100 years ago, 1925, what did it say? 100 years ago, the Dow Jones was $141, and now it's $45,000. 25 years ago, it was around 9, 10,000, 11,000, and now it's 45,000. It was a good 4x. So what I'm finna show y'all, how to buy a dip so y'all can 4x return your money again. So this is what we're gonna go over, right? Boom, these are the sectors of the stock market. We got consumer discretionary, consumer staples, energy, financial, healthcare, industrial, information, technology, materials, real estate. Boom, we got all these indices, right? This is what I want y'all to know. I want y'all to first focus on the best sector. The best sector is going to be technology. But technology ain't the highest on here. You can focus on energy too. Focus on technology first. Because see, technology stocks are going to grow way more because see, technology expands the GDP the most efficiently, you know, in technology. Because boom, okay, say this, boom, if I give you a quantum computer, or I give you AI, or I give you any computer, bro, you can make unlimited money on a computer. You can make unlimited money with technology. So when disruptive and good technology come, you want to buy a dip on some shit right before they come out with some good ass disruptive technology. You feel me? But we can also see technology sector also performs, you know, negative 28%. But this is how they performed over the last 10 years. Yep. So what we're gonna do is we're gonna go over some things in the technology sector and see if we can find some good dips, or how do I find good dips within this sector. Because look, here's the thing, after it does its worst, it's gonna do its best. So it's like after a bear market, it's gonna be a bull market. So let's yeah, so we can start with LW. LW is not a technology stock though. FI is fintech technology. Like FI, okay, let's check this out, man. Let's do this right. Okay, so for FI is a fintech company. It operates in the merchant and financial segment. Boom. All right, let's check this out, right? Let's check out some measurements, because after it works, it always does its best, right? So look, first thing first, what we see, bruh, what we see is this 200 EMA, right? Boom, EMA 200. You see how what it does every time it hit this 200 EMA, it goes back up, right? So boom, that's already a trend. You see a RSI, right? What happens when it gets to the bottom of the RSI? It goes up, it goes up. What is it doing on this pullback right now? It's at the bottom, and it doesn't get past that 200 EMA. If it do get past that 200 EMA, guess what it do? Recover. Why? Because it's a good company. That's another good thing. You want to be in a good company that's consistently beating earnings. If they can't consistently beat what they're estimating themselves to make, and consistently perform for the shareholders, and like keep their debt down and keep good assets, if they can't manage their money, don't let them manage. Don't give them your money. You feel me? Because they're gonna lose it. All right, look, let's see how far it came down from the 200 EMA. Right there, it came down 40% one time. Let's see where it's at right now, though. How much is it below the 200 EMA? It's below 12%. How often does it get below the EMA? 12%. Let's see, it did it back in 2008. Damn. 2008 during the financial crisis. When the next time will we have a financial crisis? Who knows? So yeah, looking to bounce look, 30%. See, this thing really don't go up under that 200 EMA and it holds. The last time it went up under, it did, what, 30% plus. But this time they're, yeah, they working with TD Bank in Canada. They got good news. So it's like they got bullish news. They got consistent beatable revenue. They got good leadership. Their technicals lining up. So for this to be at the worst right now, I know it's gonna be at the best soon. This the sector it's in though. It's in the financial sector. But yeah, let's go. Let's keep going. Another thing is, bro, when you invest in something, you want to see if you don't see like maybe 100 years. I don't know what's your goal, but maybe 100 years, 300. If you can't see 300 years of consistent growth, man, don't go there. Cause look, like people think the stock market risky, but I mean, check it out. I showed y'all since 1700, the stock market has been increasing. If you look on here from 1993, the stock market has been increasing. Yeah, it has pullbacks, but I mean, this is the same cycle as things that go on sale in stores or houses. You know what I'm saying? It's gonna go up in value. It's gonna come down on sale. It's gonna go up on value. It's gonna come down on sale. Buy it on the sale. When it go up in value, sell it or hold it. Keep stacking it. Hold it in your start a Roth IRA and just hold this shit. Okay, so boom. Let's go to some technology stocks. Let's see, Verizon. No, they're not. I mean, look, check this out, right? Nah, I don't know. I don't like some of the phone companies. I ain't gonna lie. I definitely don't like, yeah, I like INTC. I forgot. I love they ass. Okay, this one that I love, right? I love them because they're expanding in India, and with them expanding in India, they expanding in what the biggest what India got the biggest population. They expanding their AI in India, and they just consistently growing as a company still. And they undervalue right here at this level, right? Boom. Okay, check this out. Yeah, this is how you find the undervalued stock, right? Damn, I gotta go over support and resistances, stuff like that. See the RSI though? Look at the RSI, right? Undervalue up under the 30 RSI, right? Up under the 30 RSI. That bitch gonna go. But see, it's not 100%, man. See, it's gonna go, but then it's at the top. It's gonna pull back. It could pull back even lower. So that's why it's like you need multiple reasons to buy the dip. But if you buy the dip, you have a way higher chance of being profitable, man. Let's go over one more just because this video like at 9 minutes. Let's see. GPN was fucking, I was fucking with GPN back in the day. Hit some stop losses. I'm not tripping. The system is still going strong. All right, we can look at GPN, right? Look at this past resistance, turn support. We can check out this area. Boom, it's oversold. You know, they could be at an oversold area. Let's see. They got earnings coming up. They failed them 2 earnings. Gotta read why they fail earnings. Why is they failing earnings? Is because they CEO quitting. If they CEO quitting and they getting a worse CEO, why would I invest in something with a worse leadership? Don't invest in nothing with a worse leadership. Okay, annually their revenue been growing year by year. That's perfect. Is their free cash flow growing? We gonna see that. Is their profit? Well, their net margin is growing as well. 15% net margin. Okay. Let's check out their balance sheet. Is their assets growing? No, their assets not growing, but they still got more assets than liabilities. So why is it not growing, and will it be growing? If it's growing and they investing in good assets, perfect. Then they're gonna keep growing as a company. Their revenue gonna take back off before people can tell, you know. Cash flow, ooh, they making more income this year. They're financing more and they're investing less. Why is that? Gotta see, man. Quarterly. Gotta see, gotta read up on this shit. What is analysts thinking? Analysts thinking it's gonna go up 9%. What do other analysts think on Simply Wall Street, on Yahoo Finance, on Robinhood Gold? What do other analysts think? You know, what's the newest news on Twitter? Twitter, you just type in the money symbol and you type in the ticker symbol, money symbol, GPN. Latest news, top news. Money symbol, Dow. Latest news, you know what I'm saying? So, boom, these are some of the sectors. Pull this shit up on your own. Look at the sectors for yourself. Look at every sector, man. Just study this shit. And yeah, we all gonna be great investors, man. We all gonna let this financial wealth accumulate over time, and we all gonna be great, man.